Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the January 13th stock market wrap up for you to use for January 14th, 15th, or whenever. Because not much has changed, and today was actually well, no, I didn't quite make it here, but as you can see, today's range was very tight. Overall, not much happened. Excuse me, not much happened today. The S&P 500 finished up 0.18%. The Dow Jones Industrial Average finished down 0.3% on higher volume, so that would be considered a distribution day by technical standards. And the Nasdaq rallied 0.5%, volume was higher, still confirming the rally attempt that it had in November. However, if we go back and just select a random date, like right here in October, we can see that the market's not going very fast. So let's see. Yeah, so if we just go back to October 23rd to now, it's only moved about negative 3.5%, so not much is happening. Just wanted to try to give you a better range. And then let's go ahead and look at the Russell 2000. You can see it was up 1% today, and the S&P 600 up 0.77%. Now the problem is the S&P 600 is still below its 50-day moving average. So is the Russell 2000. So is the Nasdaq, as you can see. Let me get up closer here because it's barely here. As you can see on the Nasdaq, it's just barely under that white line. Subscribers can see it. I'm sure those watching for free can't see it, but if you have charts and you can put up a 50-day moving average, that will not be hard for you to see. And then last but not least, let's look at that. Well, not last, but check the S&P 500 below the 50-day moving average and the Dow Jones Industrial Average below the 50-day moving average. So everything is below the 250-day moving average, and that means you're not necessarily wanting to be long stocks here. And besides that, let's just look at some random charts I'm going to throw up here. TBV. Do you think that this action happens in a bull market? Clearly, reversing. Shooting star. The next day, not good. Follow that, not good. Let's look at pets. Another breakout attempt. Turned out not so well. CSKI. Another breakout attempt that did not turn out so well. And let's see. What else can we look at? I guess that's about it, really. I mean, that's off the top of my head. I mean, trust me, there's been a ton of them. We can look day and night at all these charts that have broken out and broke down. So really, I don't need to go showing all these. Let's just go ahead and move on and go straight to the United States dollar. Everybody says that the dollar should be crashing, but yet as you can see, the dollar's been doing nothing but going up since the retake of the 5200-day moving average in July and August. As you can see here, a nice close at the high of day back in July to where it is now. The United States dollar is up 14% during that entire time. Everybody's been telling you the dollar's going to collapse. Now listen, I'm not saying that it's not, but when it is, we can wait for the chart to go back to telling us when it is. I got bearish on the dollar back in 2002. There are businessmen in Maui that can confirm this, just like I got bullish on gold in 2002. This was a long-term trade also that I mentioned. And I would have said cover your dollar short in 2008 if you went short in 2002. I would no longer want to be short the dollar. I would want to be long the dollar. I also would not want to be long silver a whole lot. I would have gone long a little bit of it, but obviously it's not quite ready yet. It's going to need some more time to move sideways. The same is with platinum. Platinum the past 2 days has pulled back 4.95%, which just means that it's still in its uptrend. It's still got tails in both those pullbacks, but it just doesn't seem ready to explode higher. And if we look at gold, same thing. Gold's still above its 50-day moving average. We have tails. But sadly, yesterday's candlestick pattern, price bars, is what we call this, candlesticks with the shaded and the open areas. It's easier to see opens and close. You can see how it was doing well intraday, and then from those highs intraday, as soon as it gets back over the 200-day moving average, they sell it off, and they close it almost near their low of the day. So things weren't good yesterday for gold, and they didn't get any better today, even though they didn't go down that much, and it is above the 50-day moving average. I've been looking at some gold stocks like NEM, like AUY, AU, let's see, KGC, and the same thing keeps gold actually, and keeps coming through my mind. They just need more time. If they have put in a low, this is a better low than what Kramer was showing you with pot. What's the difference between pot and then gold? Look in the middle window. Do you see how pot has tons of big, gigantic red bars? That's not bullish. And if he's got people at thestreet.com telling him that that's a bullish chart, that is sad. I'm going to show you what a bullish chart looks like. This is what a bullish chart would look like if you want to use his support resistance levels that he was using yesterday. Because on the rally, you have what? Big, tall green bars. You want big, tall green bars whenever you go long, not big, tall red bars like this one. So I don't know what he was thinking, but whatever. And if he's got a technician there that's telling him that that's a good long, whatever also. Let's see, how much more time do we have? Because I don't want to waste too much of your time. Yeah, we'll go ahead and wrap it up. The bottom line is gold's not a long, silver's not a long, platinum's not a long. They're not a short either. The stock market is still in a downtrend. Shorts is still time to hang on. There's no reason to sell. Look at Citigroup today, or yesterday. Breaks down at the 50-day moving average on heavier volume. Today, volume was lower, did not recoup the losses, still down overall 12%. What did Bank of America do today? Breaks down yesterday, continues to fall off on even heavier volume. Now, we're going to need to see a one-day capitulation reversal, or you're going to start needing to see some heavy volume in some of these banks, or else there's going to be some bad news out there. And I just don't have a whole lot of faith in these bank stocks and anything right now. We have one long that's doing well still from our original buy point in June. We went long this stock here from 625. I don't have a 56% gain. I have about a 51% gain, so this is better. And we still only have a 51% gain in 1, 2, 3, 4, 5, 6, 7 months. That's horrible. That's not good at all. So, but that's about as good as they come. Because if you do a scan of 2008, you'll see that there were only 22 stocks up over 100%. 2003, there were over 1,000. In 2004, there were over 500. Don't you think something's wrong with going long right now? Maybe it's not safe to go long. I don't know. But if you buy it on the way down, you can just accumulate more and more and more. And then you're stuck with Fannie Mae. How did all those guys buying all the way down turn out? Oh, I know how they turned out. Go check Bill Miller's returns on his mutual fund. 15 years of greatness destroyed in 1 year. Don't worry, he got rich off you. He took your fees away. He got his money. Fees were a lot bigger than what I charged for my site. And I kept you out of Fannie Mae the entire way down. And if you knew how to short, you could go short it. But we were still going short the leaders. We didn't go short these laggards. But bottom line, I don't care what Kramer says. Technical analysis works, and it works better when you use fundamental analysis with it via a methodology like CanSlim. Stick by my guns. This market is not a market you want to be long. Those that think it's a market to be long, why don't you go study the 2002 lows and use volume? You know, I know volume, whatever, volume. I can't say rally and I can't say volume. You want to know why? Because I'm from St. Louis, Missouri, and I'm some dumb hick kid, whatever. Go to 2003 and 2002 off the lows. You'll see a rally on stronger volume. You'll see bigger green bars above the yellow line in my middle pane of the windows. It's called a 50-day volume average. You'll also compare that to the sell-off that came right before that. You'll notice volume was lower in 2002, leading to the 2002 lows. Same with the early 2003 sell-off, leading to the 2003 rally. Look at all the big, tall green bars then, and look at the current rally now, and look at the volume that came before it. I think it's quite clear by looking at stocks like Fannie Mae, Goldman Sachs, Bank of America, what you should be doing. And pot. And even TNH here pretty soon. It's time to be short the market, folks, not long. Suckers bought this recent bottom. And if you played it and got a good little return on it, bottom line is, where's all your 75% returns the past year? I mean, if only 22 stocks are up over 100%, pretty sure not many of you guys got 75% on the long side. So just watch what you do, because I got some people trying to tell me that they did this and this and that, and I can go through my own emails and look at your own track record and see that, no, if I would have listened to you, I would have lost 95% in DRYS. So just keep that in mind, everybody. Aloha, this is Joshua Hayes for BigWayTrading.com. Please, everybody, don't think technical analysis is voodoo. It is not voodoo. It saved me from losing money last year, and it's made me a lot of money. Don't let Kramer fool you. He makes money now only by selling services. I still make the majority of my money by making money in the market. That's how I have to make my living right now. Kramer does it. He just talks about it. He's smart. He's tricked y'all. So anyway, enjoy. Have a great night, and I'll see you all tomorrow. Aloha.